Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 16th of December, and the market finished with another week close here today to finish out an ugly week. We were starting higher at the beginning of the week, but then as the Federal Reserve came out after the CPI numbers, etc., we saw a lot of weakness here. So let's take a look at the intraday time frame first. This red anchored volume weighted average price is from the CPI. Right here is where the Fed came out as well. And you can see that we have gotten smashed. We broke below this band of what was potential support. And that's why we always, when we're above it, we call it potential support, because when we come down through it, we have to wait for evidence that there is actually support before we decide to buy. If you're playing guessing games and buying there, well, hopefully you spit it out quickly. Otherwise, you wrote it down pretty hard. Over back to the daily time frame, we came right up to the year-to-date anchored volume weighted average price. That's that pink line. I have it on there all year, and this is where we found the exact high this week. We broke the downtrend line. As I always talk about, the breaking of a downtrend line doesn't mean a reversal of trend. It means that the rate of descent has slowed, nothing more. Now, when we look at this daily time frame, there's a couple things going into the end of the year that might be viewed as maybe we could get a bounce in here. I'm not bullish. I'm not overly bearish, but you have to look at it and say, again, where have we come from? We just dropped from 400 and whatever this number is, what the high this week, 411 down to 383. So we dropped pretty significantly there from that high. We're below the advancing 50-day moving average. We're right on the anchored volume weighted average price from the COVID low that we've been talking about for the last 2 years. And we are below the anchored volume weighted average price from the year-to-date low with momentum lower. So we have a pattern of lower highs and lower lows. And if we get up into this area, now we have to look at this as a potential band of resistance. So it might go like this and continue to just ramp higher. It might run up a little bit through it and then come back down, or maybe it builds a higher low and then rallies up. Either way, if it was to do this for example, you would want to buy here with a stop under there. If it was to rally up, find resistance at the 5-day moving average, you would want to short here with a stop above there. I don't have a crystal ball. I never know what's ahead for the next week. If you listen to me to try to say here's what's going to happen next week, you've got it all wrong. I never know. I simply lay out what I think are the most likely scenarios. We could crash. I mean, it's possible. We're at the end of the year. There's a lot of underperformance from fund managers, a lot of frauds being taken down. We had a real good one to see go away. These clowns had it from Atlas Trading. I won't get into that. It's boring. But the fact is that, money is continuing to flow out of the market. We have a very clear pattern, and that pattern is lower highs right here, and we have lower lows. That's the definition of a downtrend. Now, maybe this time it makes a higher low and then makes a higher high. I don't think it's likely, as I've been talking about for several months. I think the more likely scenario is if they don't scare you out, they will likely wear you out. And maybe, in 6 to 9 months, we can start to see this market rally again. It's similar to PayPal. A lot of people were arguing with me, way back here that it was a good company. And I said, don't buy the stock in a downtrend. And if they don't scare you out, they'll wear you out. This is what looks likely for PayPal. And this is something I've drawn it. We had this big rally. We pulled back. First, we found supply at the 10-week moving average, then the 30-week, then the 40-week. If the 40-week moving average is still declining, it's guilty till proven innocent. And if they don't scare you out in this decline, they will typically wear you out. And now here we are at a closing low for PayPal after hitting, 310. It's down at 70. And a lot of people, said, hey, well, Brian, look how wrong you were. Look at this big rally in here. And that big rally is now completely gone. Every single person who bought it in here and still holding is losing money. And it's not to say I know better than other people. I'm saying understand market structure. Look at stocks like Tesla. When you look at a stock like Tesla, there's no other way to objectively look at this stock than to say it's in a downtrend. It's below the declining 10, 20, 30, 40-week moving average. And it blew through the 200-week moving average. As I've been pointing out, where are we now? Well, we're right at this anchored volume weighted average price. That's the level I thought it had the potential to get down to. I didn't expect it to come down here that quickly. What is that level? Well, let's look at this on a daily time frame and back it up to there. That was a big gap higher. Now, a lot of people are saying, well, is it going to close the gap? I don't think it's going to close the gap, but this was a big event that shifted the psychology of the stock. If that fails to hold, well, what's the next potential level that this market could find buyers? Maybe from this gap lower or from this low. So if we look at those and back them over to a weekly time frame, actually go back to the daily time frame and just bring them all together, these are other potential levels of support. What we do when we get to these levels is we say, now we need to look on a shorter term time frame to see if there is any evidence the buyers are gaining control. If you think that means that the buyers are gaining control because it just, got the shit kicked out of it today and then went sideways, that's not what it means. We need to see this market at a minimum rally up, maybe pull back, get back above the 5-day moving average. Otherwise, you're just throwing your money away. There's no point in buying stocks like this in a downtrend. If you're watching this on YouTube, please give it a like. You're watching it. Tell me they like it. Just give it a like, subscribe, etc. Other stocks that Apple looks like it's headed to the COVID anchored volume weighted average price. It's a good company. Who cares? We're not writing papers about what a good company is. We're investing in stocks. To me, it looks like the stock is continuing down towards 128 or so. Look at a stock like Disney. People got excited about it, after Iger came in. I think that was right here. And after that last earnings report, it was bought up. But look at the average price since there is at about 95. The stock is 90. It's in a downtrend. If they don't scare you out on the way down, they will typically wear you out. And that's just the way it goes. There's nothing magical about it. There's, some of the stocks that I was involved in this week, I was looking for this stock SIG, as a potential breaking into a stage 2 uptrend. It broke past this resistance, and on the daily time frame it looked like it was going to hold in here, so I purchased it right on this point, and I got stopped out that 2 mornings ago right here. It was a small loss, and by getting out right in here at 69 and a half and recognizing a small loss, I didn't hold it down another 7%. But they weren't all losers. GFS, I believe I mentioned that one actually in last week's video. GFS, I got involved over here, sold the first third this day, sold another third, where was it? I think right here. No, I'm sorry, that was the last third. I sold a third right up here. Why did I sell there? Because it was a breakout. As I always mention, I never buy these breakouts if they are, when they're extended, I always sell into them. You have to ask yourself, where had the stock come from? It just came from 63 and then broke out at 69, 10% in a market that's bearish. I'm always going to take some profits into that. I sold a third there and got sold out, the balance sold out there. Here's one that was an interesting one, was MP, that I put on for Alpha Trend subscribers, and this one was a short sale. We entered this one on Monday rather. On Tuesday, it gapped up. Our stop was to be above this level right here. Well, it gapped up through that level, and I always say never set your stop before the market opens. Give it the first 5-minute candle of the day, and then if it doesn't make a higher high on a 5-minute candle, your stop goes above the high of the first 5 minutes of the day. So it never got stopped out. We lowered our stop to this level at the end of the day, and then we lowered our stop and took a third of the stop position off at a gain of 50 cents at the open today, just to reduce our risk. And now our stop and the balance is right here. So that is a winning trade. It had the potential to scare us out because of that gap higher, but don't set stops before the market opens, is the bottom line there. A lot of damage being done in this market all over the place. Good companies with strong user growth, etc. Whatever good companies are, I'm not interested. A bad stock is a stock like Roblox. It's in a downtrend. It has a declining 40-week moving average. It got above that 40-week moving average for a while, and that served to bring in kind of uneducated money when the 200-day moving average is still declining. It's still in a period where they need to wear people out. So most likely Roblox is going for a new low, like so many stocks have in this market. These are stocks and setups I talk about every day for Alpha Trend subscribers. Let's talk about the biotechs too, because the biotechs have been the group that had the potential to enter a stage two uptrend. And I've been talking about this a lot. Here's the anchored volume weighted average price off of the all-time high. We came down, we got above that. We're still holding it. This is our inverted head and shoulders pattern that we've been talking about. So when we look at the daily time frame, it's still kind of stuck in this range here, and it's still below the anchored volume weighted average price from the COVID low. As I was telling subscribers, if the stock was to do this, people will look at it in here and say, oh, wow, look right back there. That's the point it went to a stage two uptrend. And you know what? They probably would be right. However, if you look at where we were 6 weeks ago when it did that, would you have wanted to purchase at that point? That point is right here. It had just rallied from 112, 113 to 136. It had just rallied 23 points. That's not the time to buy. So it's all about the time frames coming together. I'm not long the biotechs. I'm looking to maybe get long these guys, but so far it's not giving me a reason to. It just made a lower high this week. It keeps hammering away on this band of support in here, and very similar to the band of support in the SPY, the band of support in the NASDAQ, and the band of support in the Russell 2000, they all broke and they're heading lower. So I'll leave you with that, and if you're looking for more, join up at alphatrends.net. Have a good weekend.